2, 1, 2.
Order filled.
Right, in a long position here, targeting this bearish 4 hour. Now price action hasn't been great, it's been pretty slow, so I'm not expecting much, but we're coming into the macro now and we're seeing a setup here. We've got a 1 minute inversion here. It was inverted at this point, it was a bit too big. Wanted to wait for a retracement here and another push just to be sure, and so I've entered here. Stop just below here at around 30 point stop. Let's see how it goes. It's been a bit of a rocky day today, so I'm really not expecting much. I'm going in with very low risk, just 2 contracts as opposed to the 4 I would normally take, and we'll see how it goes. I'll likely not take a trade after this if this doesn't play out. A little bit of higher time frame. Tapped into a 30-minute order block. We've been bullish ever since. We've come past 50%. We've not turned around at that point, so I feel like we want these highs. I'll move to break even at 9:30 open, just about here. And yeah, just wanting. I feel like the draw liquidity is this 4 hour gap here. We've got some low resistance highs to take out here. Let's see what happens. I need to turn that music down, I think. Anyone in the chat, let me know if you can hear me clearly. Please, just so I know I'm not talking to myself. Been a rocky week, to be honest. A couple of new accounts. I'm down 250 on the accounts, which is not a lot. Risk has been managed well. Been in quite a few trades, so to have the accounts intact is the main thing. But yeah, if we can end the week at least at break even and just come fresh next week, then hopefully we get some better price action. Yeah, oh yeah, Sully, what you saying, my bro? Good to have you here, my man. Yeah, thanks, Mumsy. You can hear, always have to have it up full though. Well, you have to have it up full. The mic's coming through. Let me turn my mic up a little bit. How's that? Does that sound a bit better? Get a bit closer. I just didn't have time to set up my other mic. I might do that now, actually. All right, cool, nice. This is a 5-minute bearish gap, so looking to invert this. Just got 1 minute here, order block. Got some equal highs over here. So nicely into the the lunchtime, or returning from lunch macro. So expect to see some movement. At the same time, I don't have much hope for these market conditions. If we don't get a nice move in this macro here and we just consolidate, I'll probably call it a day and just go over some other trades. There was a nice entry at open today, short entry that I took. I'm on a break even day at the minute. 1 win, 1 loss. So 2 wins, 2 losses. It's just been a tricky day. Also trading on the move on my phone, which is never ideal. But yeah, we'll also do a daily bias. Just go over how I determine my daily bias, and just do a few trade recaps. Since we're here. Yeah, but look at the size of these candles. That's coming into the macro. Those 1 minute candles are just horrendous. Look at them. Not good.
Yo, you saying Moses? Yeah, just see your message, brother. Yeah, man, we're good. I'm gonna jump on a daily bias after this. Yeah.
Order filled.
So I'm added to my position there. I'm looking at this as a sweep on liquidity. So I'm looking at this as accumulation, manipulation to 50% of the range, and I'm expecting distribution now. So I'm probably only going to take one trade. The amount of risk that I'm looking to take today is around that anyway. So this would be the only trade that I'd really want to be in on. So I'll tighten up to here, 200 risk. Bring it down to 1 to 2. Break even stays at the same place. Another reason for the adding to my position is we've closed quite a few times in the top half of this 5-minute bearish gap. So I expect this, because of these closures, I expect us to invert this gap, at which point we've got quite a solid level. So some people might get scared of a candle like that, but for me, that's a liquidity sweep, and the only reason we sweep liquidity like this is because we're looking to go in the opposite direction. That's the idea anyway. And also bearing in mind that the last liquidity sweep we had, or the last key area, was this order block down here, and since then we've been moving steadily into this area. So I'm more than sure that this is the next draw on liquidity. We haven't got there yet. So by the time we get up to this point, I'll at least be able to get to break even and then be in a risk-free trade. So another reason that I added to my position. If not to break even, I could at least take off a significant amount of risk. We'll see how the candles unfold from now. See if we can get a bit more volume in the last part of this macro. A way to look at it is, if we accumulate like this and then we have this sweep down, and we stop out anybody that took positions here, and we tap into a gap here, at this point we want to be bullish. If not, if we continue down and we get stopped out here, this is just price action, you can't trade it. So we'll at least know one of two things. We'll either be right and we'll get to break even, or we'll be wrong and we just don't want to trade the rest of the day, because that type of thing there is, if that's not just a liquidity sweep, if this isn't accumulation, manipulation and distribution, which, you know, that to me is what that is, then it just means that the price action, the model is not there, and that tells you just to stay out of the markets. So at least this way we know we're in on a trade where we know after this how to move forward. 15-minute order block tap there as well, I didn't realise, so a bit more confident on that now. And 50% of the range, so that's the range there. And the last sweep. So a new 5-minute candle. We've not managed to invert this gap just yet, and we're seeing some resistance at this order block here, which is expected. It's to be expected. But as long as we keep digging into this order block, that shows intention to move through it. So we want to see 50% of this 5-minute bearish gap. We want to see that used as support now, since we've closed in the top half, and so we don't really want to close in the bottom half. We can move in and we can wick it, but we want our closures to stay in the top half if we're bullish. Yeah, that's not what you want to see. This is exactly the type of price action you just can't trade. You don't expect to see that once we've, I mean, look at this, it's untradeable.
Order filled.
Yeah, so that's me done for the day. One of the worst days I've seen for a while. This is just horrible. Which is unusual because we had some high impact news today, two bits of news. So I felt like we might get some price action in these later macros, but nada. Alright, so risk managed pretty well anyway. Down 200 on the day, no big deal. Alright, let's have a little look at some bias. How do I determine my daily bias? Alright, so it's pretty similar to how I form my entry, right? So a couple of levels that I'll mark out before New York Open. And the first level is yesterday's close. I want to know where we are in reference to yesterday's close. So if you go to session, regular trading hours, I'm not sure how many people use this, but it's a technique or strategy used by ICT. So today when we first opened up, I took a short, I took a nice short because my draw on liquidity was yesterday's close, which was here. Regular trading hours close, which is, and it closes at 4:10. So at least on Topstep it does. So as we opened at open here, I was bearish because we had this gap below. So if you look over the history of these gaps, very often, not always, but very often when we close and then open, we like to fill that gap out during that day. This one took a bit longer, but as you can see, we eventually filled this gap out. These are all inefficiencies. So we close here, open here, we fill that gap out. So this is New York Open and this is market close. So notice how when we open, we like to fill the gap out. Close, open, fill the gap out throughout the course of either a day, sometimes take 2 days, but very often that happens. So I like to use regular trading hours as a draw on liquidity, and also that would say that would give you a bias, at least for market open. So once we come down and we'd filled out most of this gap, we don't actually get the close, but we then tap into a 30-minute order block and then get this terrible price action and start moving back up. But very often we close this gap, so you can target this, but obviously just trail stop if you start seeing reversals at that point. So that's one of my level. One thing I mark out first, and I use that as quite a strong indication as to
our daily bias, also meaning that this is, we are opening in a premium. If we are above yesterday's close, we are opening at market open in a premium. So through Asia and London, we've moved into a premium compared to yesterday's close, and that's worth noting. That's, you know, you really want to be looking for shorts if we're in such a premium from yesterday's close. All right, so let me pull that in so you can see it. Regular trade now close, yeah, just means market closed the day before. Second one is midnight open. You want to see where are we in reference to midnight. So let's say we go here. Now these can contradict each other. Let me just change back to extended, and that's fine. They're just guidelines, but very often they're quite similar. So here's your mark. Oh, see if I can. Alright, so midnight open. Let's check that's the right candle. There's a close open, close open, close open. That's the open there. So again, if these levels contradict each other, like if we're below market, if we're below midnight but we're above yesterday's close, then it just means that you're not sure when you're biased, and it's also okay to not be sure and just let the price action show you what it wants to do. This is why I use inversion fair value gaps, which we're going to get to now, because if price is inverting fair value gaps, for example here, today you had this 15-minute inversion. If it's inverting, it's doing that because 9 times out of 10 it's seeking liquidity. Some people say, oh, I don't want to take a long because what about this gap? But the fact is, if the draw is up here, it will go through these gaps. It will disrespect them and it will invert them because it is seeking liquidity on the other side of that gap. So it would make sense then to do your daily bias using high time frame fair value gaps. Okay, so for example, I'll come to the day. The best conditions is when you are inverting or respecting a higher time frame fair value gap, which we've not had for a while. This price action is very difficult to trade because, and I'll show you the difference. 1 hour you can work with 1 hour. So for example, what are we looking at here just now? It's just, I would try to use the daily or the 4 hour when doing your daily bias, because the 1 hour isn't as reliable. As you can see here, this bearish one here, we invert that, but we don't get down to this liquidity and we turn back around before getting to regular trading hours close. But we are respecting this bullish gap here. But stick to the 4 hour when doing your daily bias, yeah? So, for example, let's have a little look here. No 4 hour gaps here. Just bear with me. Also, I will correlate with ES as well. If I'm not sure, I want to have a look at ES. So here is a daily fair value gap here. By rights, you should include the volume imbalance as well in that gap. So rather than doing from here into the wick, you should include this. So now we are inverting a daily gap here. So when we closed tonight and this day finishes and we open up again, we've inverted. So we could predict for tomorrow a retracement to 50% of this gap and then be bullish. So that would be a trade idea for tomorrow. Asia and London to be bearish and New York to be bullish, and maybe finish on a high at the end of the week. Maybe try and take out some of these highs up here that we've been waiting for. That would be a trade idea. Why? Just simply because we are pushing through a bearish daily gap. Yeah. So, for example, here is the daily bullish gap. We come down, we respect it, we actually close and invert this. So at this point, we would be waiting. At that point, you'd be waiting to see. This is the big indecision candle on a daily, slightly bearish, but mostly indecision. And at this open here, you'd be waiting to see whether this has been respected or disrespected, especially with such a small amount here. If you just run straight through a gap, for example, All right, so here, these days are higher probability. Look, when you've got a fair value gap like this, and we come down into that on the 1st of December, for example, at this point, we're looking for reversal in this gap, okay? Because as soon as you get a push down like this, if you get a 1 minute or a 5 minute inversion to the upside, that's a great place to take a reversal. Yeah. Similarly, if we inverse a gap, so here on a day like this, we've inversed a bearish daily gap here at this point. See how we retest that gap, and we can look for longs there. Retest, we can look for longs, and you see we move up to this liquidity after inverting that gap. So simply put, I'm always looking for whether or not we are inversing or respecting a higher time frame fair value gap. That's pretty much how I do my bias, along with these levels. So regular trade now close midnight. So at this point in London, we move up, consolidate all day, and then we have this sweep to the upside here. We sweep out all of these highs here. This move just before market open at 8:30, 8:45. So as soon as I saw this consolidation manipulation, as soon as I saw that at market open, I was like 90% bearish, because I had midnight below, I had yesterday's close below, and oh yeah, well, sorry, 1 second, bear with me. We had some, yeah, so we had these stacked up lows as well. So your daily bias is like, the fact is that your daily bias is not really a whole daily bias. It's not that you're bearish for the whole day, because by the time we move down like this and we hit this order block, then as soon as we hit this order block and I saw this happening, and we're closing above it on the 15 minute, then I'm bullish. I'm bullish up to where? Oh yeah, that's another level. Sorry, I knew there was a one missing. I've got it written down as well. 9:30 open. So today is 9:30 open, and yesterday's 9:30 open. So 9:30 open is a strong draw on liquidity. Yeah, so it's always worth marking that out. Yeah, especially for trading the PM. At this point, as soon as we invert this gap here, retest it, and continue up, then I'm looking for longs here. I took a short long, a small long here. And then trailed my stop, got stopped out. But 9:30 open is the draw on liquidity for me as soon as we start inverting gaps here to the upside. And previous day 9:30 open, let me have a look for that quickly. I'm not going to go over previous daily high and low and session high and low, because that's just for sweeps. Before we even look at any of that, I'm looking at yesterday's close, midnight open, and obviously we haven't had that earlier on in the day, so I'm looking at yesterday's 9:30 open. So that would be, in this case, this is today, this is 9:30 open, was it up here, was it down here? Yeah, so that was also down here. So even though we didn't come anywhere near this, I still would have had this as a draw on liquidity. So at this point, market open, we are, let's have a look at the range as well. And also you've got your premium discount here as well. So I'm just going to write these down so I can go over them again briefly. So first things first is your higher time frame fair value gaps. We haven't really got any clear ones recently that we can really sort of work with, like we did have here and here and here. It's great when we do have them, but if we don't have them, we just resort to other things. So you're looking for your gaps on your higher time frame is the first thing. Then you're marking out your yesterday's close, midnight open, and yesterday's market New York open. They're the three main. And if you're above all of them, then you can be pretty bearish at market open, you know. And then the fourth and the last one is your higher time frame range. So for example, the most recent range, and we're just talking about the most recent sweeps on liquidity. So you wouldn't range from here to here because this hasn't swept anything. This is the high because it swept these highs. So whichever high is the last one to have a swept, you mark from there to there, and then you want to determine, because this has swept these lows here, and then you want to determine, are you in a premium or a discount? So premium is here, it's in the top half of the 50%, anywhere in here. This is extreme premium, this is premium, this is discount, this is extreme discount. If you're in a premium when we open, and you're above midnight open, and you're above yesterday's close, and you're above yesterday's market open, New York open, then you want to be taking shorts all day long. You would never want to long in a situation like this. Okay, so that's how I had done my bias today, and that's how I managed to catch that short move at market open. Now, let me just, maybe I could write it down. Yeah, let me write it down, and then you can either take a screenshot. So, higher time frames, fair value gaps, and also you can use order blocks, but I would say just stick to the fair value gaps right now. If none, actually, yeah, I'll just tell you that if there's no fair value gaps, if we're not in a fair value gap, then that's fine. You just go to you use the other confluences. So premium discount, are we at a premium or a discount? Obviously shorts, premium, shorts, discount, longs. That's pretty obvious. Okay, now levels are midnight open, regular trading hour close, which is just yesterday's close, and previous day 9:30 open. And have all of these marked out on your chart first thing before you get to market open on a New York session. And that's going to give you a decent idea as to, I mean, I don't even like calling it daily bias. It just means at market open, are we looking for shorts or longs? Because it's not a whole daily bias. It's just really a bias for, because ideally you'd only want to be trading the New York kill zone, which is the first couple hours of the New York session. And in that time, you want to be catching 1 or 2 trades and then be done. So you don't need to know where the next draw on liquidity is or what the whole daily bias is, you know. When we're down here, we're in, you know, for example, this range hasn't been created yet, then the range would have been, higher time frame range would be here. I would say that the higher time frame range and yesterday's close is probably the 2 most important things. If we're down here, we're in a discount. Okay, we've swept these here, we're in a discount, and we're looking for longs. Yeah, if we're up here, we're in a premium, we're looking for shorts. So get used to marking out the most recent high time frame range, higher time, and let me write that down actually, because it needs to be higher time frame, so it needs to be 4 hour or daily. You need to do it on. Get that right. Higher time frame, premium, short, discount, longs. Yeah. So take a screenshot of that and just mark those levels out every day before you get to the charts, before you trade. And you should know, you should have a sense of whether we're bullish or bearish, you know. And today that was, it was pretty obvious. As soon as we look, as soon as we get up here, we're shorting. As soon as we get here, we're longing, shorting, longing. So you can see that this 50% mark of this range is pretty. It kind of tells you what the market's likely to do, you know. Yeah, today's just been really, really terrible price action. I mean, this is horrible. That is just horrible. I'm surprised how I've managed to only be 200 down, to be honest. And yeah, I don't expect anything more to happen. We haven't got any gaps to work with. We're now up in a premium, so we'd only be wanting shorts. There's this 4 hour gap here, but I just don't see anything happening in the PM session. So I'm going to call it a day there, guys. Hopefully tomorrow we can get some better price action. If you didn't get a screenshot of that, that's there now. If you want to screenshot it. You remember to change, if you want to get yesterday's close, then you just need to go to session, regular trading hours if you're not sure how to do that. Yeah, man. So the Instagram's in the link in the bio as well. So if you've got any questions, you can get through to me quickly on that. So yeah, just any questions at all, just drop them on my Instagram. All right. Hope everyone's blessed. Hope everyone had a blessed day, and I'll see you tomorrow in the charts. Yeah. Hopefully we get some better price action and finish the week with a nice banging trade. That would be nice. All right. Catch y'all.